Another pillar of the American dream that has been under attack is homeownership.
They're low on the list today, but it wasn't too long ago that they were the fastest growing city in the country.
New data shows the amount of homes for sale far outnumber the amount of people currently looking to buy.
Home sales across the country are seeing the biggest drop in a decade. The latest report from the National Association of Realtors shows U.S. housing prices are beginning to ease as the real estate market slows.
In 2022, a house in Queen Creek, Arizona sold for $720,000. Today, that same house would sell for roughly $623,000. That's nearly $100,000 in equity. Gone. And Queen Creek isn't even the worst city on this list. According to Zillow, Arizona home values have dropped 6.8% statewide over the past year. Redfin's March 2026 data shows Arizona home prices down 1% year over year, with 33% of all listings taking price cuts. And a recent analysis ranked Arizona third to last in the entire nation for housing market performance, beating only Texas and Florida. Let that register. The state that was the single hottest real estate market in America during COVID is now in the bottom 3. Today, we're counting down 15 Arizona cities where prices are falling the hardest. We're going from concerning to catastrophic. City number 5 is the one that surprises everyone because it was supposed to be the luxury market that never corrects. And number 1 has the worst combination of overbuilding, price collapse, and inventory flooding that we've seen anywhere in the state. If you own property in Arizona or you're thinking about buying, subscribe and hit the bell. We break down city-level housing data every week so you can see what's coming before it hits your zip code. But first, why Arizona? Because it's not random. There's a formula, and Arizona has every ingredient. 1, overbuilding. Arizona's outer suburbs went on a construction spree during COVID that rivals anything Texas or Florida did. Close to 30,000 new rental units alone came online in the Phoenix metro last year, and single-family builders were just as aggressive. Arizona is now one of only 9 states where inventory has surpassed pre-pandemic 2019 levels. 2, the affordability wall. The Phoenix median sits around $450,000, and the median days on market has climbed to 65 to 70 days. With rates above 6%, the monthly payment on a median Phoenix home is crushing local incomes. Buyers are pulling back. 3, the rental collapse is dragging everything down. Rents in the Phoenix metro dropped 3.2% in Phoenix proper, 4.6% in Scottsdale, 6.4% in Chandler, 7.6% in Tempe, and 8.3% in Glendale. When rents fall, investor math breaks. And when investor math breaks, those rental properties become listings. Let's get into the 15 cities. City number 15, Avondale. Avondale is one of the West Valley's workforce communities, affordable relative to Phoenix, but that affordability has been eroding. New construction has flooded the area, and homes are sitting longer as buyers wait for better deals. Days on market have climbed above 70, and listings with price reductions are becoming the norm. City number 14, Surprise. Surprise exploded during the pandemic as retirees and young families moved in for affordability. But Surprise ranked in the bottom 25 of 127 medium-sized cities nationally for housing market performance heading into 2026. Builders went heavy here, and now that supply is competing with resale sellers for a shrinking buyer pool. Rents are softening. Investor demand has cooled. The cheap and growing pitch is losing its shine. City number 13, Goodyear. Goodyear saw year-to-date closed sales decline 11.6% in the first 2 months of 2026. New listings fell 16.6%, and pending sales dropped 20.3%. That pending sales number is alarming. A 20% decline in forward-looking contracts means the next few months of closings are going to be ugly. Goodyear was one of the pandemic darlings. Now it's one of the metros where sellers are discovering that the buyers aren't coming back at 2022 prices. City number 12, Santan Valley. Santan Valley currently has 1,046 active listings with a median list price of $450,000 and an average of 82 days on market. That's a lot of homes sitting a long time. Santan Valley was built almost entirely on spec during the boom. Miles and miles of subdivisions that all look the same, all competing for the same buyer. When supply overwhelms demand in a community with limited amenities and long commutes, prices grind down slowly and painfully. City number 11, Glendale. Rents in Glendale dropped 8.3% year over year, the steepest rental decline in the Phoenix metro. When rents drop that fast, it signals oversupply and weakening demand. JVM Lending's data shows Glendale with a median sale price around $455,000 and 65 days on market. But the real story is beneath the median. Entry-level homes in Glendale are sitting and price cuts are becoming standard. Folks, if this data is helping you see what's really happening city by city, share this video with someone who owns in Arizona. And if you're not subscribed yet, this is the kind of breakdown we do every single week. Hit the bell so you don't miss it. City number 10, Tempe. Tempe is a college town with a massive apartment glut. Rents dropped 7.6% year over year, and Tempe ranked in the bottom 25 of mid-sized cities nationally. When 30,000 new rental units come online in the metro, and a big chunk land in Tempe, rents crater, investor properties bleed, and the for-sale market feels the drag. Tempe's condo and townhouse segment is particularly soft. City number 9, Gilbert. Gilbert also placed in the bottom 25 of mid-sized cities for housing market performance. Gilbert was the East Valley darling. Top schools, safe neighborhoods, premium price tag. But premium means exposure. When rates are above 6%, a $550,000 home in Gilbert costs $3,500 a month before taxes and insurance. That prices out most local buyers, and the ones who can afford it are negotiating harder than ever. City number 8, Mesa. Mesa ranked 45th out of 52 large cities nationally for housing market strength. That's worse than Phoenix. Mesa is the third largest city in Arizona, and it's sitting firmly in buyer's market territory. Inventory is elevated, days on market are climbing, and the outer edges of Mesa, Apache Junction adjacent, further from the core, are seeing the steepest softening. City number 7, Peoria. Peoria's median single-family home price fell 2.7% to $535,000, down from $550,000. Pending sales dropped 12.5% year over year. Peoria also ranked in the bottom 25 nationally. The Northwest Valley was supposed to be the new growth corridor. But growth corridors need buyers, and buyers at $535,000 need rates below 6%. They don't have that. City number 6, Tucson. Tucson came in 41st out of 52 large cities nationally for market performance with a composite score of just 29.1. Tucson was always the affordable alternative to Phoenix, but that affordability gap has narrowed as Tucson prices ran up during COVID. Now homes are averaging $311,000, still cheaper than Phoenix. But in a city where median incomes are lower, the math is tight, inventory is building, and buyers are hesitant. City number 5, Chandler. This is the one that surprises people. Chandler is East Valley premium. Tech jobs, Intel, great schools, modern homes. It's supposed to be the safe bet. But Chandler's median sale price dropped roughly 7% year over year to around $525,000. Rents fell 6.4%. And Chandler ranked in the bottom 25 of mid-sized cities nationally. A 7% price drop on a $525,000 home is nearly $40,000 in lost equity in 12 months. That's not a correction. That's a collapse for anyone who bought at the top with 5% down. City number 4, Phoenix, the flagship. Phoenix ranked 42nd out of 52 large cities nationally for housing market strength, with only 15.4% of homes selling above asking, compared to 27% nationally. The median sits around $450,000 with 59 to 66 days on market. There are roughly 6,600 active listings in Phoenix proper alone. AEI data confirms Phoenix among the metros with the widest gap between current prices and what local incomes can sustain. The pandemic surge took Phoenix from $293,000 to $470,000, a 60% run. Now it's giving that back, slowly, painfully, month after month. City number 3, Casa Grande. Casa Grande is the canary for Arizona's outer ring housing gamble. Sitting between Phoenix and Tucson on I-10, it became a hotbed for spec builders targeting first-time buyers and investors. Those spec homes are now sitting. The commute to Phoenix is over an hour. The amenities are limited, and the buyers who are supposed to fill these subdivisions are priced out or choosing to rent. Inventory is elevated and absorption is slow. Casa Grande represents the risk of building a housing boom on the assumption that people will keep driving further for affordability. At some point, affordable but far stops working. City number 2, Maricopa. Maricopa's median sale price has dropped roughly 7% year over year to around $335,000, with homes sitting an average of 100 days on market. 100 days. There are roughly 1,200 active listings in a city of about 60,000 people. That's an enormous amount of supply relative to population. Maricopa was ground zero for the 2008 crash in Arizona. Entire subdivisions went to foreclosure. Now it's happening again in slow motion. Different cause, overbuilding plus rate shock instead of subprime, but the same result: too many homes, not enough buyers, and prices grinding down. City number 1, Queen Creek. And here it is. Queen Creek home values have dropped 7.4% in just the past year, according to Zillow, with the median sitting at $623,649. JVM Lending's data shows the decline at roughly 8% year over year with 80 days on market. Closed sales declined 3.8%, and pending sales fell 9.5%. Queen Creek tops this list because it combines the worst of everything. It's a high price point suburb, $623,000 median, in a market where local incomes can't support that without sub 5% rates. It was one of the fastest growing cities in Arizona during the boom, which means builders went all in. New construction is still delivering into a softening market, and at 80 to 100 days on market with nearly 10% pending sales declines, the forward-looking indicators are getting worse, not better. If you bought a $700,000 home in Queen Creek in 2022 with 10% down, your $70,000 in equity has been completely wiped out. And then some. You're underwater, and the data says it's not done falling. So there it is, 15 Arizona cities: Avondale, Surprise, Goodyear, Santan Valley, Glendale, Tempe, Gilbert, Mesa, Peoria, Tucson, Chandler, Phoenix, Casa Grande, Maricopa, and Queen Creek. Here's what to do. If you're a homeowner, check your equity position. Not where Zillow said it was in 2022, where it is today. If you're in one of these outer ring suburbs with thin equity, you need to honestly assess whether you can hold for 2 to 3 more years. AEI projects continued declines through 2028 in overbuilt Sunbelt metros. If you're a seller, price to today's market. 33% of Arizona listings already have price cuts. The sellers who price realistically are the ones walking away from closing. The ones who price to ego are sitting 100 days and chasing the market down. If you're a buyer, you have more leverage right now than at any point since 2019. Builders are offering rate buydowns, closing cost credits, and price reductions. Resale sellers are negotiating. But be strategic. Buy in a location you understand, at a price that works at today's rates, and never drain your savings to stretch into a home you can't comfortably afford. Arizona's boom was real, so is the correction. The cities that went up the fastest are coming down the hardest. The data doesn't lie. Subscribe, hit the bell, and drop a comment telling us which Arizona city on this list surprised you the most, or tell us which one we missed. See you in the next one.